Last week, I discovered something incredible that I had to share with you. This really shows the power of investing. I want to have a look at two funds. The first one is VWRL, which is the Vanguard All World Fund. And the second one is VUSA, which is the Vanguard S&P 500 Tracker. Now, I typed in total shareholder returns into Google for these funds, and what came up was an incredible website, a website called Backtest.curvo. So I encourage you to have a look at this website and go on and have a look. I'll put these links in the description so you can go on and have a play about yourself because it's super interesting. What Backtest does is it has a look at portfolios, specifically funds and ETFs, breaks them down into the return, and you can see a whole bunch of data. It's super, super interesting. So you choose your data period for which you want to compare. I've chosen 2005 to 2022, and I've done that for both VWRL and VUSA. So let's dive in and have a little look. First of all, what it does is it puts in 10,000 euros. Doesn't matter whether it's euros or dollars or pounds, we're going to get the same result here. And it shows you over that time period that you enter what its growth will be. So you can see, starting from £10,000 on at the start of 2005, would bring you to, what even is that? I can't even see what that is. That's about 40k within 10 years. So that's a nice 10-year period. Here we go, underneath here. So you got 10,000 to 42,000. So that's 4 times your money in 10 years, which is pretty good. And so on this website, you've got a whole bunch of different ratios, you've got your returns, and this is super, super interesting. You've got your annual returns for the VWRL fund since 2005. So you can see there were only 3 years out of, how many is that, 10, 11, where you would actually lose money. One of the years, of course, 2008, was a very, very bad year. That was the financial crisis. That's about as bad as things get. And it sunk the entire world's stock markets. And then we had our worst loss ever of 39%. And then every year after that, we're plus 31, plus 20, lost a bit more, plus 15, plus 17, plus 19. I mean, these returns are crazy, considering if you just keep your money in cash, then you get zero. You get 0%. You're just zero. Whereas here, you are gaining pretty much every single year. You'd have to be very unlucky to invest in a year where, you're getting nothing. Or you're losing money, even. Then we've got histograms, and then we've got drawdowns. So this is really interesting. This is if you invested right at the peak, what is the, how far does it drop and when? And you can see that obviously during 2008, it dropped massively down to about 50%, lost about 50% of its value, and took quite a few years, 5 years, to get back up to that peak again. So that's about as bad as it gets. It takes 5 years to get back there. But if we keep going down, this is what I wanted to show you. This was incredible. So this is the chance of win. This is the win rate. Now, of course, we can see here that the win rate is 82%. If you hold on for 1 year, the win rate is 82%. I mean, that's crazy. An 82% win rate. So if you go to the casino and bet on black or red, assuming zero isn't there, you've got a 50-50 chance. So the casino always wins, so you've probably got a 49% chance, win rate. 49% win rate. Here you've got an 82% win rate. When do you ever get that in life? When do you ever get a chance to make an 82% chance of a gain? I mean, it might be 1 pence that you make. It might be, you might double your money, but 82% chance of a win rate. And if you hold on to that investment for 5 years, it's 93% chance of win. That is ridiculous. But this is just the start. Let me show you how ridiculous it gets. So first of all, we're going to switch to Vanguard USA, so the S&P 500 tracker. Let's have a look at that. So exactly the same time schedule, 2005 to 2022. So that's a good 17 years there. Let me just check I got that correct. Yep, 17 years. So your 10,000 would have become 60,000, 6 times your money in 17 years. So that is just as an incredible return. And we scroll down, you've got your annual returns. You can see, of course, back in 2008, we had a big loss of 33%. Every single year since has been a gain, even a tiny, tiny, tiny little gain in 2018. So one of the worst years on record, the third worst year on record, was actually still a gain. That's ridiculous. We've got a drawdown here. I'll let you, you can go on yourself and have a little look. It's super, super interesting. And here we go. Here's our win rate. So if you buy the S&P 500 tracker from Vanguard, your win rate is 83.9%. And if you hold it for 5 years, the win rate is 88%. That's just a ridiculous stat. However, this is not as ridiculous as it gets. So what I'm going to do is I'm going to just refine this slightly. We're going to go from 2010 to 2022, and you can just change this time period and it updates everything for you. So let's go 2010, 2022, and this is on VUSA, which is our S&P 500 tracker. Let's go down and have a look at win rate. If you invested for 1 year between 2010 and 2022, your chance of win was 95.5%. And 2 years or longer, you had 100% chance of winning. 100% chance of winning. It's kind of like free money in a way. It's ridiculous. And if we go to VWRL as well, this is the All World Tracker by Vanguard. And again, put in the same time period, 2010, 2022, that's 12 years. Scroll down to our chance of win. Again, within 1 year, our chance of win is 90%. Within 2 years or more, our chance of win is 100%. 100%. That's crazy. That's absolutely crazy. So I couldn't believe it when I saw this. And it really did change my opinion on investing in ETFs or funds. Traditionally, I'm an individual stock picker. I love investing in companies, but if my companies get too overvalued, I'm definitely going to be looking at this, because you can't go wrong with a 100% win rate. But when do you ever get that in life? So that was what I wanted to show you. Hopefully you can, have a dig in yourself, and this kind of shows why everybody is raving about the S&P 500 tracker, why Warren Buffett suggests that is what you should invest in, because it kind of seems like a no-brainer. But of course, do your own research, and this is not investment advice. This is just analysis. So I'll put a link to these guys in the description below. Check them out. See what's going on, and happy investing. It just shows how powerful investing can be. So leave a like and a share, comment, and subscribe to the channel if you like these videos, and I will be following up with more, including why the S&P 500, why you should invest in it, and also why you should not invest in it. So definitely check out those videos when they come online. So see you guys soon.